Hey.
Hello.
Mr. Emmanuel, thank you so much. My most punctual accountant. Thank you so much.
How did I become punctual?
We have to be punctual, isn't it? I just want to give people a chance. So we will just give them 2 more minutes whilst they other people. Please tell people that our special guest is on and that they should kindly turn up because we don't want to learn and leave them. We all have to learn together today. I'm so happy. Today has been a bit easier. Logging on. So call that friend to join us, please. Yeah. Today we are talking about setting up a business as a new starter. What you need to know setting up a business. Okay, setting up a business, what you need to know. Yes. Guys, please invite somebody, okay? Mr. Emmanuel is a lecturer. He's an accountant. I've been with Mr. Emmanuel for quite some time now. He's one of the renowned, accountants and a lecturer of our time. He doesn't joke with his time, and he's one gentleman that I really respect so much. He's not new to TikTok. The people that I bring, they are just, busy with their computers and Microsoft and all that. But when they listen to the dream, they just want to give their all and support the dream because they feel that everybody has to be, successful in all aspects, being it physical, being it emotional, being it spiritual. And setting up a business is one of the most important things if, you want to be financially free in life. So without much ado, I would like to introduce to you all the most lovable, most respected, most admirable lecturer of our time and a professional accountant who has been in the industry for a long time. It's no other person than Mr. Emmanuel Intim. Thank you so much, sir. I really respect you and I thank you for taking the time out to come and grace this platform with your knowledge. Thank you.
Thank you very much. Thank you.
Yeah, before we dive into the main topic, mostly if it's your first time, we just want you to encourage us because as we are all here to just learn from the big people, a lecturer like you, an accountant like you, just a bit about your story, growing up, how life has been for you to get all these titles for yourself so that it will encourage somebody out there who just admire you when I put you out on the flyer that, hey, this accountant, accountant, a bit of challenges that you were able to pull through, coming up and how you see yourself now. If you can share that with us, we will appreciate it before we go into the topic.
All right. Thank you very much, Diana. Good evening, everyone. My name is Emmanuel Intim. As she rightly said, I'm an accountant and a lecturer. I graduated with BSc Administration and Accounting from the University of Ghana in 1999. And then after my national service, I came to the UK to do a professional accounting course, which is the ACCA. In 2006, I completed my ACCA as a chartered accountant. And then 1 year after, I went to do my master's at the London South Bank University, graduating with MSc in Accounting and Finance. And since then, have been working in various capacities, working individually, working with friends in the practice, and then setting up my own business. And then finally, I've taught in a couple of private, institutions, business institutions within the London area. And then since 2016, I've been teaching as the senior lecturer in accounting and finance. My favorite, modules or subjects, some people will call it, has been tax, UK taxation, and then auditing, and then computerized accounting. That is the use of accounting software to prepare accounts for business own use and for statutory purpose. It hasn't been very easy, as you might know. Somebody who came from Africa with our background, we go to school without any experience at all, and then all you do is to go to school, you finish, you have no experience. So although you have the qualification, because of lack of experience, you find it difficult to get a job. You can apply for 100 jobs and you can get only 2-3 responses, but most of them will be a no, because you haven't got the experience, you haven't got what it takes to be taken. So my advice usually to friends is that you, whilst studying, should think about, getting some job to do, either a voluntary job or just for work experience, so that by the time you finish school, you will have some experience to be able to, get a job. So that has been my experience, that I've always struggled a bit when I finished school to get the relevant job that I wanted, that I studied for. But by the grace of God, I am now in a position of even employing someone. So that is my story so far. I'm married with 3 children, and yeah. Thank you very much.
Thank you. We really appreciate you telling us your story, and I've learned so much about it, by the way you speak. I think you are focused, and you are somebody that you are determined, and you are a family man, which I respect so much. Thank you so much for sharing. You guys, he's a busy gentleman. He's very, very busy. For him to give us 1 hour of his time, please, let's take advantage, because the people that by God's grace I get to get on Diana's Diary are, very busy people that don't really deal with these kind of things, but they are really, really keen to just give us the knowledge that we need to climb on the ladder to become like them. So let's hop on this experience, please. You can see how his phone is ringing. We will leave you soon. So yes, Mr. Emmanuel, thank you so much. I don't take today for granted at all. Now you can teach us, as new starters, what do we have to do, to start up a business? What do we have to know?
Thank you very much, Diana. The purpose for this evening is to give you an overview of what you need to do if you want to start a business, or maybe if you are new to business. So first of all, to look at the business organization types, and then look at the preparations that you need to start your business, and then identify probably the sources of income or capital that you might want to use to start your business. But also, everyone, whenever you start your business or want to start your business, you have responsibilities. Whether you're working as a sole trader or you're working as a company, or running your own company, you will have responsibilities to the statutory bodies. So we're talking about the HMRC, Companies House, Charity Commission, and other organizations that you have to know. And then secondly, you need to understand your own, as probably a director or maybe as the owner of the business, your own responsibility towards the business. So we have the responsibility of the business towards the statutory bodies, and you have your own responsibilities as the business owner. And then we want to look at the how to keep your records, as a business, in order not to fall foul of the law. And then where to seek for help when you need one. And unless you are a professional already practicing, you might need support. And the support could be a professional accountant who will support you all the way in your record keeping and the preparation of the accounts and the filing with the statutory bodies in order to ensure that we are compliant with the law and regulation. So that is exactly what I intend is to look at this evening. Right. So the first question is, if you want to start a business, you need to look at the business structure. What kind of business do you want to start? Do you want to start working as self-employed, a sole trader, or you want to have a limited company, or probably as a partnership business, or maybe you want to set up a charity? But each one of these structures have got their own, responsibilities, their own limitations and implications for tax regulation and other things. So you need to consider that very well before. I know some of the business structures are very easy to set up, and it favors some jobs as well. Some people may be professionals already, and so you could be a doctor, or maybe a lawyer, or maybe an accountant, or maybe a nurse, or maybe a pharmacist, a social worker. So you are in your own area. So what you might want to do is to think about whether you want to go solo. In that case, you want to set up as a sole trader, where you'll be providing a service to businesses, and then deal with your finances and your taxes. Or you may want to set up as a limited company, which is a profit-making organization, and then you, the owner, will become the director of the company, and then either pay yourself salary as a worker for the company, or probably pay yourself dividends, or maybe a combination of both, in order to reduce your tax burden. So there are different structures. If you want to work as a sole trader, you don't register it with the HMRC. What you need to do is you don't register with the Companies House. What you need to do is to register with the HMRC as a sole trader, and then you get your unique tax reference. A unique tax reference entitles you to file your returns at the end of every year, and that also means that you can provide your service and be paid gross without any tax or national insurance taken out of it. So you'll be dealing with your own taxes if you're registered as a sole trader. The problem with sole trader is the fact that probably if you're setting up and you need a bigger capital and you don't have it, it becomes a bit difficult, and so you may want to use your own funds and or look at give me a second. Give me stuff here. All right, thank you. So sole trader, you have to deal with your own finances. You need to consider whether that is the most appropriate for you. For me as an individual, I think if your business is not of a bigger size, there's no need to register it as a limited company. You may start as a sole trader, and as the business is becoming bigger and bigger, that you might want to hire more people to help you, and you might want to remove yourself a little bit from it, and therefore set up a limited company. One advantage of the sole trader is that your personally responsible. The business is you and you are the business. So there's no separation legally between you and the business. So if anybody wants to sue, they sue you because you are the business. But the profit is 100% yours. And then you pay personal tax, which means you are entitled to personal allowance. Now, with the personal allowance, you are entitled to 12,570 tax-free before the remainder is taxed. But it's progressive tax, which means that if your income, that is profit, is higher, then it means that you will be paying 20% tax, and then the 40% tax with the higher tax, and then additional rate tax, which is 45%, depending on your income. And then also comes in the issue of liability. So when you are a sole trader, your liability is unlimited. What it means is that if the business goes bad and the business owes, how much you can lose is not limited to only the amount that you invested in a business, but creditors can chase you and get for your money that is already saved. So your entire assets is at stake when you are a sole trader or self-employed individual. With a limited company, you are deemed to be separate from the company. So there's a legal separation between the company and yourself. So the reason we call it limited liability is that your liability, or how much you can lose whilst doing this business as a limited company, is that you can lose all the money you invested, but not anymore. Which means that if you have any private assets, it cannot be, used to defray the cost of your business. And then limited businesses or limited companies are deemed to be a bit more reputable. So when you're going for a loan and other things, it's more likely you'll get than a sole trader, because with a sole trader, they're looking at your personal credit status in granting you a loan. Whereas with the company, they look at the company as a whole. Although if it is a new business, they may want to look at the credit status of the initial directors. But otherwise, companies are more likely to be granted a loan than sole traders because of the use of personal credit history, etc. No.
Mr. Emmanuel, can I come in a bit? With regards to the sole trader and the company, with a sole trader, is it like your name as a person, sole trader with your account and everything, and with the business, the limited company is to do with the company yourself, but maybe you can put other people. It can be a group of people. Is it? So sole trading is personally me. I don't have to have an account in a different company name. It has to be Diana Opoku-Agyeman with the sole trading account. But if I understand you properly, the business can be maybe my own invented name, maybe Ajingo's Enterprise.
I mean, look, if you have to set up a sole trading business, or if you are working as a self-employed individual, you may want to use any name, except that it's not registered with the company's house. It's only registered with the HMRC. But when you're registering with the HMRC, it is registered as you, the individual. So you can say Diana Opoku-Agyeman trading as maybe Diana's Dairy or something like that. So the business is registered in your name.
Okay.
But you'll be trading as, that is, if you want to have a name at all, then it will be Diana Opoku-Agyeman trading as whatever name that you choose.
Okay. Yeah. Okay. I get it now. Thank you.
Okay. So you want us to continue?
Yes.
All right. So whilst looking at that, we need to look at the common types, which we looked at. We looked at the sole trader. We looked at limited liability company. Then we also have partnership. And a partnership is similar to sole trader, because it's two or more people coming together to form a business with the aim of making profit. And when the profit is made, the partners will share the profit, and each one of them, in the same way as sole traders do, file their own self-assessment tax return and pay their taxes. Except that with a sole trader, you still need to, or with a partnership, you still need to register the partnership with the HMRC. Tell them that, okay, this is a business, it's trading as maybe J&K Associates. We are trading with the aim of making profit. One person will be responsible, and then at the end of the year, when you prepare your accounts and you file your return, you're not filing the return as partnership with the aim of paying tax as the business, but just for HMRC to know that, okay, yeah, this business made a profit of this, and they share it between the partners, and this is how much each partner got. That is where it ends. And then each partner will now be deemed to be a sole trader or maybe a self-employed individual, and then they will have to declare this profit from the partnership business to HMRC, together with any other source of income they may have. So it's possible that you are employed. It's possible that you also have another business, maybe a property. It's possible that probably you have another investment somewhere where you get dividends, or maybe you get interest. So all of that, together with your profit from partnership, will be combined, and then you file your tax as an individual and then pay taxes on that. So that is the partnership. That we're talking about two types of partnership. We have one that is ordinary partnership, and then we have one that is a limited liability partnership. The ordinary partnership has got the same, features as a sole trader, where your liability is unlimited. So if the partnership business goes bust, then the partners will be jointly and severally responsible, so that it is possible that although you lost maybe £1 million as a business, and the company has got, or the business has got assets to the value of 500,000, it means that they can chase you individuals to make good the difference between how much the company is worth and how much the liability is, so that your liability is unlimited. And that is why now we have another form of partnership that is called limited liability partnership, where you register it with HMRC and then the company's house, not as a company, but just to limit the liability of the partners, so that in the case of the business going bust, the partners will lose only the amount that they invested in the business and not any more. So that is the difference between the ordinary partnership and the limited liability partnership.
Thank you.
And then we have, as we all know, the non-for-profit organization, or if you want to call it charity or charitable organization. Remember, if you want to set up a charity, the charity hasn't got shareholders, so the profit is not for distribution. The profit from charity is used for the purpose that it was intended. So it's possible that you set up a charity will make a lot of surplus. We don't call it profit because it hasn't got shareholders. What the charity has got are trustees, that those who are responsible for managing it, and therefore you can make a profit, and we don't call it profit, we call it surplus, and the surplus must be used to advance the purpose that the charity was set up. In the same way as we have Heart Foundation or churches and other things, these are all used to generate funds to deal with a specific problem within the society. So if you want to set up a charity, you should know that that is not something that you can use to make money yourself. Although if you provide any service, or if you work beyond what you are supposed to be doing, the charity trustees can agree that, okay, we are going to pay you for what you do. Otherwise, a charity doesn't pay its trustees. Now, I would like to continue with that. So, what are the initial preparations that you need to do as a business if you think about one? So, you need to conduct the market research. You need to find out what the market for your business is. You want to work as maybe a distributor of maybe biscuits. You want to look at the market for biscuits and then see whether you need to look at the competition. How many competitors are there? Where do you want to establish it? What are the risks involved? How profitable is that business? What are the profit levels for the businesses that are already in there? How much does it cost to enter into the industry that you want to operate? And how long will it take for you to be able to make a certain profit? You need to do that feasibility study. We call it feasibility or maybe market research. Before you do that, you need to probably do a business plan to look at how much it's going to cost you to start. Make a forecast of how much you are expected to gain in respect of income and your expenditure. If you're going to borrow money for the purpose, look at that and then look at your forecasted income and expenditure to see whether there will be profit, and therefore you will be capable of paying the loan if it is that which you've gone for. And then one reason is for you to understand the market. One reason is for you to use that as a basis for saying, yes, I want to do this business. And the other one is to provide the basis for going for a loan and to prove to investors, banks or other investors, that if they give you or grant you money, you will be able to pay them. And then you need to register the business. So how do you register the business? You have to register with the HMRC if it's a limited company, and then Companies House. If it's a charity, you have to register with the Charity Commission. If it is a sole trader, you don't need to register with the Companies House. It's only HMRC, etc. So you need to know who to register it with. There are some other businesses that may have other special bodies that you have to register it. For example, let's see, Daniel's Kids or something like that. You have to register with CQC, which is another body, regulatory body, to make sure that you comply with law and regulation. So before you set up, you need to know who are the regulators within the industry that you want to work, and make sure that you register with them and then comply with all their requirements in order to be able to, ensure that you're okay. Otherwise, you could find yourself on the wrong side of the law. So obtain the licenses that are needed, open a business bank account, start operating, make sure you have your documentations. One thing that I had sad about is where people set up business, the business is viable, etc. They start and they don't keep records. So all their expenses and their income is neither here or there. It's difficult for you to be able to trace them. So probably they have combined the business income with their income. They combine the business expense with their personal expenses. If it's a company, for example, you cannot, use your own bank to collect the money. Neither can you use your own bank to make payments for the business. So you need to open a bank account. Make sure that all money earned by the company is collected through the company bank account, and then all expenses come out of that. If you're a director, you have a bit of leeway where you can use the company money, but that will be regarded as part of your remuneration, which at the end of the year you have to pay tax on it, because it will be deemed to be maybe a payment or maybe in kind, and therefore you have to declare that to HMRC and make a tax payment on that. So that is registration of the company. And then one other thing is, for me, where do you get funds? You can have your own personal money. If it's a sole trader, you need to be able to distinguish how much your personal income is and how much you are committing to the business. And then if it is a limited company, any money that you give to the company's profit, you can take it back. So that is very important. You can go for a bank loan in the name of the company. But if you go for a bank loan in your personal name, and you give it to the company, then it means that you borrow money from the bank as a personal loan and you're lending it to your own company. That's how it has to be recorded. And then there are government loans, which we call the startup loans. And then we have venture capitalists, which is businesses that specialize in taking money from individuals that want to invest. And then you can access funds from there. So they want to have a stake in your business by giving you the money, and then you share the profit with them, or they charge you interest on the amount that they gave you. We have crowdfunding. I don't know if you know. We have businesses that,
I don't know what happened. I'm so sorry.
Okay, you went out of it. Yeah. Okay. So I was talking about this. I don't know whether I was still live, but I was talking about, sources of finance, and we were talking about personal savings or family loans, and then talking about bank loans. But if it is a personal savings, you need to be able to clearly say that this is how much I'm committing to the business, and not that whenever you're paid, you put it into the business. You need to be able to separate them. And then if it is a loan you're going for from friends and family, you need to be able to clearly record that. So record keeping is very important for businesses. HMRC expects you to keep records for not less than 6 years if you're a business. So don't take it for granted when the year is ended and probably you finish preparing your accounts and you think, oh yeah, documents have been submitted, so that's all. They can even come back to you in 20 years time, and they call it discovery. So we want to make sure that in the last 20 years you have been good. They can do that if they believe that something is gone wrong. So record keeping is very important. Record keeping can be in the form of hard copies or electronic, but you need to keep records of all your income and expenses. One other advice that I would like to give to individuals is, it's not very difficult to keep folders or files and then name them. Maybe this is bank file, or maybe this is payments file, or this is income, or this is letters from the HMRC and probably company's house, etc. So have a couple of folders in which you put different letters and different documents. That makes it easier when there is something to look for. People lose. I know people who don't even open their letters. Okay, for months they haven't opened, and there are some people who are afraid of even brown envelopes. They won't open it. If you get a brown envelope in this country and don't open it, you are putting yourself in trouble, because most brown envelopes have got deadlines and limitations on them, and most of them go with penalties and fines and self charges. So if you do not stick to the deadline, you are in trouble. So do not ignore letters when you receive them. And that is why I expect all my clients to keep folders. When letters come, open it. If you don't understand, show it to your accountant. Your accountant will deal with it for you if you cannot deal with it yourself. But don't say, I haven't opened my letters. It's not an excuse. It's not one of the reasonable excuses for not filing or not adhering to requests to do something from the statutory bodies. So it's very important to keep your records and not only leave them on the table and then you see them getting lost. If you keep records and you keep them chronologically, it's very easy to look for something. When is the deadline to file and you're looking for authentication code and you cannot find it, you have to request for another one, and it will take a couple of days before it arrives, and etc. So before you realize, you are late, and that may cost you money. It can even lead to you, whether you are the sole trader or you are the director of the company, you can have criminal record for not adhering to statutory requests. So it's very important that you do that. What else? can we talk about what are your statutory responsibilities? So, if you're a director, you are responsible for managing the organization. So it doesn't matter whether you have staff or not, you are responsible. So directors are responsible for managing organizations. If anything goes wrong, directors are held responsible, not the staff members. It's like having the prime minister and something going wrong somewhere that probably has never been, but he will be held responsible. You are responsible. So if you're a director, you have to make sure that the company keeps proper records. The company deals with requests from the statutory bodies. When the year ends, make sure that your accountant deals with your taxes, your accounts and taxes. I mean, with the company's house, it's not about taxes, but it's about filing the company financial statement with them. And if you are late, there are penalties, and the penalties increase with time. So if you leave it for 3 months, there's a penalty, and as it goes up, it increases. You don't want that to happen. So my advice is keep records and liaise with your accountant all the time, just like Diana does. Always keeping in touch. Yeah.
Yes, I'm always on top of
Yeah,
things.
yeah. So if you pay your staff, the HMRC expect you. There are 3 ways by which you can pay people when they work for you. One thing you need to know is that whether you are a sole trader or you are a limited company or even you are a charity, if you're paying people, there are 3 ways by which you can pay them. You pay them because they have their own company, in which case, when they work for you, they issue you with an invoice and then you pay their company. And that is the end. The other way is if they are also self-employed. If they are self-employed and you have obtained the evidence that they are self-employed, then you need to pay them gross, that is without deducting tax and national insurance, unless otherwise they are within the construction industry scheme where self-employed subcontractors are deducted 20%. That is the law. And otherwise, all self-employed individuals who work for you must be paid gross. But that is when you have been able to obtain evidence that they are self-employed, i.e. a letter from the HMRC, or they're showing you a letter that has their unique tax reference on it. And then also making sure that you comply with the IL-35 law, which is not what we are going to talk about now. But the main idea about IL-35 is to ensure that individuals who should be treated as employed should not be treated as self-employed. So there is a criteria for determining whether somebody should be treated as employed or self-employed under IL-35. But on the assumption that they are treated as self-employed, you have to pay them gross, and then they will pay their own taxes through their own self-assessment tax return. And then the third option would be that they have to be treated as employed, in which case you have to pay them salary, whether monthly or whatever time of your choosing, and then deduct tax and national insurance and pay them the gross salary and pay them the net salary, and then the tax and national insurance that you've deducted, among other things like pensions, or if there is any statutory deduction like student loan deductions, you deduct that through your commercial software, and then you pay to the statutory bodies, or the HMRC, or the pension company, or the student loan company. I think the HMRC collects even student loan on the student loan company's behalf and then hand it over to them. So 3 ways: either they are company, or they are self-employed, or you treat them as employed. And that is the only way to pay people. So when I hear of people saying, oh, you're paying them black, which means you just pay them cash without deducting any tax or national insurance, I don't know how you're going to define or explain that in the books, what the payment is about. So there's nothing like black money, or black pay, or dark pay. There's none of that, unless you are now diverting money from paying a contractor or maybe a professional as something else, in which case it is up to you. But professionals are not allowed to encourage you to do that, because we're also held accountable for anything that goes wrong, which we know about but do nothing. As I said earlier on, you have to keep records for 6 years, so make sure that you don't destroy your documents. For those of you who especially work as hire car drivers, so Uber drivers and all those, the HMRC is now chasing them. Before, Uber used not to declare their income to the HMRC, but now the government has asked the HMRC to declare to them whoever they paid for how long, and to check whether they have paid tax on the income they earn from Uber. And if you haven't paid, you'll be asked to pay taxes on those income that you earned long ago. That is, if you work for them for long, and then pay penalties and interest on those penalties. So it could be very dangerous that you work for Uber and other companies and not file self-assessment tax return. That is, if you are treated as self-employed. I don't know if there's any question that you want.
Thank you so much. We've got Kwamena Asari. Kwamena, you can ask your questions, please. Kwamena, if you can hear us, you can ask your question. Okay, what I want to ask whilst he gets ready to ask his question, I'll prefer to write. Okay, that's fine. I think you requested, so you can type it, darling. Yeah. So, Mr. Emmanuel, whilst you were talking, what I wanted to know is that if you have various businesses like myself, maybe I have child minding, I also have this nursing thing that I'm doing as self-employed, and other businesses that you know of. There are some that you say is that I can't mix it together. I just want you to elaborate on that to somebody that want to merge all the businesses together and the risks involved. What are some of the businesses, like starting up a business? Maybe the person have one or two, because with the renting, you said you can't put the renting with regard, because they have a code for that, so you can't put that in the same business. But when it comes to other businesses like child minding and the nursing, we can put it under one umbrella. So is there any reason why they make us do that?
Okay, so when you say you have businesses, if you have business as sole trader, so maybe you're dealing in child minding as a sole trader, if you haven't registered it as a company, maybe you do something else which is also sole trader or sole trading. All of it are different businesses. So even when you're filing your tax return, they will ask you how many self-employment businesses have you got, and then you have to list each one of them, and then the income you earn from each one of them, and then the expenses with the corresponding expenses, and then the profit, etc. You can have a spreadsheet where you can have different businesses, each income, each expenses, and then you can have the total, and then you can use that to file your tax return. But if the businesses you have are limited companies, then you can't mix them, because they are separate legal entities from each other, and therefore they earn their own income, they make their own expenses, unless you are combining them as a group of companies, in which case we can have common income and expense. But even that, when they are preparing their accounts, we have to be able to split the income or the expenses that are made together. So if you are the director of the company, or maybe company A and company B, you as an individual will have to file a tax return to declare how much you benefited from company A and how much you benefited from company B. So company A will file its own tax returns, prepare its own accounts to show its income and expenses, probably including how much you benefited from them, okay? And then company B will also prepare its accounts, show its income and expenditure, including probably how much dividend you took or how much salary you took from there. But you as an individual will have to prepare a tax return to show how much you got from company A, how much you got from company B, and then pay tax on it. But so long as businesses are deemed to be separate legal entities, they cannot be mixed together. Expenses cannot be mixed together.
Thank you very much. What are some of the things that can lead you to be bankruptcy?
Before you become bankrupt, the issue is that you cannot pay your debts when they fall due. So why can you not pay your debts? It's because probably you haven't run the business properly, and therefore you owe. And so if you're talking about the company being bankrupt or you an individual being bankrupt, is it
not the individual, the company? How can the
company? All right, okay. So whether you are an individual or a company, the only way that you can become bankrupt is where you cannot pay your debts, or unless otherwise your business is deemed to be illegal, in which case your business will be closed down, and then all your assets will be defrayed, will be sold, and then used to pay your debts. And if the debt cannot be paid, then the business will be made bankrupt. But usually when a business cannot pay its debts, when they fall due, and the creditors can take you to court, and then the court can declare you bankrupt if you cannot pay, in which case you cannot continue to operate. The business will have to close down and then not make any more income.
Thank you. So as a sole trader and a limited liability person, with your experience on the field, what would you advise is best?
So personally, the limited liability status is what I consider. If you're a sole trader, your liability is unlimited, which means if anything goes bad, you can lose all the investment you made in that business as well as other assets you have. But if it's a limited liability company, the liability or how much you can lose is limited to how much you invested in that business. So you are more or less safe in terms of liability when it comes to the limited company than the sole trader. At the moment, the tax rate for companies, maybe small, medium-sized companies, if your profit is up to 50,000, you pay a tax of 19%. If your income or your profit as a business, a limited company, is between 50,000 and 250,000, you pay 25% less some kind of relief that they give you. So usually your tax is between 19% to 25% if your profit is between 50,000 and 250,000. But if your profit as a business is more than 250,000 in a year, then you pay a flat rate of 25%. So that is for companies. With the individual, if your profit is up to the first 12,570 is tax-free, then the remainder up to 52,270, or say the next 37,700 is taxed at 20%. Then if your income or your profit is beyond that 52,270, all the way up until 124,140, you pay 40% tax. And then if your income is in excess of 124,140, you pay 45% tax. So you need to look at how much profit you're making as a sole trader or as a self-employed individual. If the profit is not too much, then I'll consider that you go for a sole trader, because at least you have the personal allowance of 12,570 before you pay the tax of 20% on the remainder. Whereas for a company, you're paying 19% of the profit up to 50,000. Okay, so you might want to consider that as well as the liability. And then if it is a company, remember you can raise money easily as compared with being a sole trader, because if anything affects your personal credit history or status, that affects your ability to raise finance to support your business as well. Whereas for limited companies, individuals are not considered when a business is going for a loan, unless the business is a new one. Otherwise, directors or the owners are not considered.
Thank you. Thank you very much. Anybody has a question? Please, you can type your question below if you have any question. We've got an expert with us. If you've been struggling with your accounting, when it comes to your accounts, if you have a company or you want to start up a business, please do link up to me and I'll connect you to Mr. Emmanuel, who has been, supporting me for the past years. I'm proud to say that I've got about 3 ladies, 1 gentleman that is on here listening to him as well. That has also, I have introduced them to Mr. Emmanuel and has been helping them. There have been issues with other accountants. You need to go real. He will guide you, make you understand whatever that you are doing when it comes to starting up a business. And if you are in it already, you need to make everything balanced. And you need someone who is an expert, someone with a professional accountancy certificate. You can't go wrong with such a person. And he's so affordable. He's very, very affordable.
I think there's a question that I can see. Somebody said, can I register for VAT, and what are the pros and cons? If you want to register for VAT, it doesn't matter whether you're a sole trader or you are a limited company or you're a partnership or you can register for VAT. Now, VAT is not compulsory unless your income in any year or in the next 30 days is expected to exceed the threshold, which currently is 90,000. So if your income is not going to exceed 90,000 in any 12 months period, or is not expected to in the next 30 days, you are not compelled to register for VAT. But even that, you can decide to register for VAT voluntarily. So we have voluntary registration where it is not compulsory for you to register because your income has not reached the threshold. And then we have the compulsory registration where your income has reached or is about to reach in the next 30 days. Then you have to do that. If you do not register when your income hits that threshold, you can be given a penalty by the HMRC for not registering for VAT. At the same time, if you are registered, it means that you have to keep records of all your income and expenses. As soon as you register, you have to start charging VAT, and you have to issue VAT invoice, which means that your invoices should show your company name and VAT registration number on those invoices. And that means that you have to separate the VAT that you have charged as output VAT. And then if your making any expenses that you have to pay VAT on, you have to also separate the VAT that you've paid on your expenses or maybe your inputs. So we call it the input VAT. And then at the end of the period, normally quarterly, you have to account for VAT to the HMRC. So the VAT you have charged and the VAT that you have paid as a business, what you do is deduct the VAT that you have paid from the VAT you have charged, and then you pay the difference to the HMRC. That is what we call the VAT return. So just being able to gather how much VAT you collected from your customers and the VAT that you paid to your suppliers or your input on your inputs, and then deduct the difference and then give it to HMRC. That's what we call the VAT return. But to do that means that you need to keep records, because HMRC is very concerned about VAT, and usually if you make any late filing or late payment, or if there's any suspicion of something not going on right, they will visit you and they will demand that you show all your documentation relating to your income and the VAT you've charged and your expenses and the VAT that you've been charged. So if you want to register for VAT, know that it goes with additional responsibility of keeping proper records. If you want to register voluntarily, it's okay, because we know that businesses that are VAT registered, somehow people think that they are substantial business or they are reputable businesses when you are registered for VAT. But you should also know that if I am a business and I sit next to you and you register for VAT and I don't register for VAT, somehow your prices are going to go up unless you are prepared to lose money from your profits. So if we are selling for £100 each, and now I'm registered for VAT, I'm compelled to register to charge VAT of 20%, means I'm now going to sell it for £120. So when customers come, you are more likely not to be purchased or patronized, because your prices have gone up because of VAT you are charging. Unless you want to match the cost of your competitors by reducing your price to that level, in which case you will be losing profit as well. You'll not be making as much profit. There is another form of, so aside that, there is another form of VAT that you can, we call it a flat rate VAT scheme, in which case you don't account for the VAT that you charge or the VAT that you were charged. What the HMRC does is they look at every business and then say you are registered for VAT with a flat rate scheme. They can say, if you're an accountant, your VAT rate is maybe 10%. So 10% means that if you charge VAT of 20% to your customers, at the end of the quarter, you pay 10% of your sales income to the HMRC. So you don't need to do VAT return that shows all your input VAT and output VAT and then deduct it and give the difference to HMRC. All HMRC does is to say, with your type of business, this is your VAT rate, maybe 8%. We call it a flat rate percentage. So flat rate percentage, if it's sometimes 14%, sometimes 10%. So if you have charged 20%, the HMRC will say pay 10% of that to the HMRC. So it means that you keep the difference. So there are some businesses, especially those who drive or delivery, I know them, who don't usually pay a lot of VAT. Okay, so they charge VAT, and then the HMRC asks them to pay a certain percentage of their sales income to HMRC as the VAT payable, and then they keep the difference. So you can register for VAT and it will act as a cash flow additional income to you, because the VAT that you get charged will be less than the VAT that you will get if you go for the flat rate scheme. But you should know that in each of these, you have to keep records and be able to file it with HMRC. And when they require, you need to be able to prove to them about all your income and expenses.
Oh,
I don't know
thank you.
if that question is answered.
Yeah. Are you happy? I think she should be more than happy, because you've even elaborated very, very well and more deeper. You've gone more deeper. So let us know if whatever the question was well answered. I think you've answered it even more detailed than the person expected. Thank you so much for putting it that question. It has really helped all of us. Thank you. There's a lady called Jane Ban Kamara. She's asking, do you do CIC? What's CIC?
CIC is more or less community interest company. I think that's what it's talking about. A community interest company is similar to company limited by guarantee, which hasn't got shareholders. So a company limited by guarantee is potentially a charity. So it's got trustees, or I mean, in the case of CIC, it's got directors, but we don't have shareholders who will, benefit from the profit that the CIC makes.
Her question clear? You want to find out if you do CIC?
Yeah, I do register CIC. Okay. I mean, every type of company, whether it's a limited company, sole trader, CIC, charity, etc., I do. Yeah.
Jane, I didn't know what CIC is. Thank you for letting me understand. He does, okay? So you can inbox me and I'll give you his contact number and you will never regret it. Diana's Diary, we are here to support all of you, okay? Into making the right decision, especially if you want to set up a business, or if you are in a business already and your account is all over the place, you've been having issues with it. I'm more than happy to link you to one of the best, which is Mr. Emmanuel in team. I can confidently recommend him to so many people. He's not here because I want to recommend him. He's here because he wants to help, understand your accounting and your business setup. He wants all of us to do well. So that's just a recommendation from me to everybody watching Diana's Diary. And the next question is from Equia. Does it mean as a limited company, you don't have tax relief? Equia is asking you, Mr. Emmanuel, that does it mean as a limited company, you don't have to have a tax relief?
No, not really. I mean, unless there is a specific tax relief, for example, if you are maybe into farming or something like that, where you are given special tax relief, businesses do not have such tax relief, but you are allowed to deduct your expenses. So that is your tax relief. 100% of your expenses can be deducted, and then you get a profit. Only individuals are given personal allowance, which is the tax relief.
Okay, thank you very much. Gideon, he is asking, I keep getting penalties, but my company is not in operation. Is this genuine or fraudulent? The company is not in operation and he keeps getting penalties.
It's genuine. It's genuine. If your business keeps getting penalties, they only get a penalty from HMRC or Companies House. Now, Companies House is very strict about deadline for filing. If you do not file your accounts, whether the full accounts or dormant account, in the case of Gideon, I think his company, because he said the business is not operating, it means the business is dormant. But even if the business is dormant, you are expected to file what we call dormant account. If you do not file it, the penalty is the same as a company that is in operation and hasn't filed its accounts with the Companies House. And that can be increasing when you keep delaying, or if you keep not filing it on time. So, for example, if you don't file it on time this year, you get a penalty. If you file it late next year, the penalty will be doubled next year. If you don't file it again for the third consecutive time, it will be tripled. So your penalty could go high, even though it's the same late filing.
But how
So
do you resolve it?
how would you resolve it?
No, dissolve it because it's not in operation. You
If
don't need.
it's very easy to dissolve a company. You can dissolve it online now, and I can do that for you. It's very easy, and I don't charge a lot for
No.
dissolving your company for you. Or we can do a paper dissolution, which is also easy. But doing it
Emmanuel,
online is easier.
thank you so much. One thing I like about, before I was trading with one Chinese, I wouldn't mention his name, as a sole trader before I met you. And when you call them, I know it's one of the headaches. Most of the nurses that do agency, you get an accountant that you call them, they don't even pick for you to explain things to you. But one thing about you is that even when you are lecturing and we do call you, right there and then you find time within 2 days, you have filed, my taxes, and the people that I have recommended to you are all saying the same, and you are so affordable, even 30% cheaper than the ones that were not picking my calls. Okay, so guys, please, Mr. Emmanuel is somebody
Thank you very much. Thank you.
Yeah. So thank you, Mr. Emmanuel. I really appreciate you, and the people that I've recommended are also saying good things. Thanks to my husband for introducing you to me. I'm so happy about that. Thank you for gracing the Lioness Diary. There's a lot of questions, but because of time, I'll take 3, and God willing, maybe you come again, because this topic is really in depth and a lot of people have so many questions. Jane Ban came again and saying that, do you help with registration? Jane, I think he did say that. And please, I'll let him give his number, his work number. Mr. Emmanuel, if you don't mind, if you can mention it to me, I'll just type it whilst you saying it so that people can take it and call you. What's your work number?
It's 07932
07932
07
07
4048.
4048. Okay. 07932 74048.
That's it. Yeah.
So, ladies and gentlemen, I've put Mr. Emmanuel's contact on the chat, and that's the benefits you get when you come on Lioness Diary Live. Even though I'm going to post it on YouTube, you get the opportunity to ask your questions here. YouTube, you can learn, which is good, but the advantage of coming on live is asking your personal questions and also getting the opportunity to get in contact with the experts who do come here. So Jane, you can contact him after. Just take the number, write it down, and you can deal with him, or just contact me if there's anything. And free recommendation, if you want to chase him, I know his whereabouts, whatever you want to go back, you will come and thank me later. Okay, somebody that has done his professional course just coming to help us. Okay, he's very, very affordable, very, very affordable. If I tell you, there's a lady asking a question here. Good discussion. Thank you so much, my darling Judith. Agnes, thank you. Is there any question? Good evening, Gideon Answer. Oh, okay. So is there any question, ladies and gentlemen? Mr. Emmanuel, can you see any question that I'm missing from the chat? So far,
not really.
Yeah. So far, guys, we've been talking about setting up a business, what you need to do. So, Mr. Emmanuel, in just a brief, for those who were not here, just in 5 minutes, like what you've spoken about, just hit on the bullet point so that someone can also, who didn't come early, will just get to know in setting up a business, the most important thing they have to know about.
Right. Okay. So this evening, what we've done is to look at the different types of businesses that you can have. You can decide to go for a sole trader or register it as a limited company. and then or go for a partnership, in which case you are joining hands with others. If you go for sole trader, you are personally responsible. You and this business are the same. You can have a name for the company, but still you are deemed to be the business. If you go for a limited company, you and the company are separate legal entities. So the difference between the two is the limited liability status, which is if you're self-employed or sole trader, your liability is unlimited, which means that if your business goes bust, you can even lose your private assets. Whereas for a company, you won't lose your private assets. You only lose how much you've invested into the business. That is why we call a limited liability company. With a sole trader, you are 100% owner, and therefore you enjoy all the profits. And then also remember that where there's a plus, there is a minus as well. So whilst you are enjoying 100% profit, you are enjoying the 100% liabilities when it falls. We also looked at the different ways by which you can register, and we said you have to register with the HMRC and register with Companies House if it's a company. But if it's a sole trader, it's straight away with the HMRC, and at the end of the year, make sure that you file your tax return to declare your income and then pay tax on it on time. The deadlines are very important because HMRC, when you are late, especially as a sole trader, when you are late by one single day, it's £100 one single day, and that holds for 3 months. And after the 3 months, you have, if you continue to delay in filing your return, it's £10 a day, and that will hold for 3 months. So it means that within the 3 months, you have £100, and then 90 days times £10. That will be £1,000, and then after that it jumps to £350, I think £375, and then it goes up and up and up. So we can have somebody who is late for 1 year in filing, and they can have a lot of money to pay. And not only late filing, but then you have late payment, because if you are late in filing, it means you haven't paid the tax due, and therefore there will be late payment penalty, and then you have the interest and the other surcharges added. So you can owe a lot if you ignore. That's why I said don't ignore the brown letters when they come in. Open them and seek advice if you don't understand. Otherwise, you will find yourself into trouble. There are many ways by which you can register for a company. You can register online, or you can register with an agent like myself. I only charge £100 for registering a company for you, and by the next day it's done. You get all your certificate, and then I'll even help you with seeking for the opening of a bank account, and then you can be off and going. So if you want to talk to me about that, I'm ready. But then also, if you're looking for somebody who is going to do your accounts for you, make sure that the person is a proper accountant. That means they are a member of a professional body or a recognized supervisory body, like ACCA or CIOT, or Chartered Institute of Tax. And then know that if your business is becoming bigger and bigger as a sole trader, you may have to register it as a company. And also know that companies are deemed to be more reputable. If you want to register for VAT, know whether it is voluntary or compulsory. If your income is exceeding 90,000 a year, obviously you have to register for VAT and charge VAT and account for VAT to HMRC. If it is not, then you might want to actually not register. But if you choose to register voluntarily, know that you have to keep records and file your returns. Otherwise, one most important thing is about your record keeping. You have to keep your records for 6 years. Whether you are a sole trader or your company, you have to keep your records, so that if HMRC want to inspect, they can see all in red and white. I think there's more to talk about. Maybe another time we can talk about other topics like taxes only.
Okay. All right. Thank you
So
so
thank you very much for listening to me. My name is Emmanuel Intim again, and I thank you for coming. Maybe we'll meet again another time and treat another topic.
Yes. Thank you so much, Mr. Emmanuel. Those of
No
you
worries.
who joined this, there's a lot that we have to talk about. There's a lady that was, struggling. Those of you that have a business and want to be paying yourself, and sometimes due to work constraints and other things, you do self-assessment and you want to pay yourself. He does that. He does so many things, and if you don't understand anything when it comes to accounting or paying yourself to be able to get your universal, to be able to buy a house, to be able to do so many things, kindly link up to Mr. Emmanuel.
You're gradually becoming an accountant. You know all the terms. You know what to do. Yeah, that's good. When you keep up with your
I've been
accountant
for 3 years, and you are like a teacher. You're a lecturer. You make me understand, what exactly that I'm doing, and you've been helpful. That's why I reach out to you, and I'm so happy that you took the time, because I know you have to go. You've got so many things on your hands, and your phone is ringing and all that. But thank you so much, Mr. Emmanuel, because I know you have a lot of commitments. Diana's Diary, we do appreciate you, and you have been a blessing to us. Thank you so much that you are more than happy to come again and bless us.
Thank you very much. Thank you. No worries. Thank you so much, Diana. Bye-bye.
Everyone, thank you. Bye.